Thank you. Okay, we have a couple questions on the line. We'll start with, how do you recommend you choose your syndicate?
Choosing syndicate really is a matter of getting someone that's a good fit for your company. And a good fit can mean people that are know your industry. Certainly if you're a mining company, you want to look for approach syndicate members that have good, strong mining experience, have specifically in the commodity you're working with. And you want to consider what your potential market cap will be. It's sometimes you want to make sure that you have the attention in the aftermarket, and you want to make sure your syndicate members will follow you. So generally, it's a mix of retail, institutional, in most offerings. You want to find the bankers that have both. Typically, you'll see sort of in a co-lead situation, one with strong institutional and good industry knowledge, but maybe doesn't have the retail, so then they'll partner with what quite often a large bank-owned dealer to get the coverage on the retail side. But really, it's a matter of a good fit and someone that's going to stick with you as you develop as a public company.
Great. Next question. When do you recommend a company starts meeting the street?
Well, I mean, in our opinion, you should start doing that as early as possible. I'm sure most management teams that have aspirations of going public probably already out there have met some bankers on the street. I guess I would just reiterate what Craig says, which is, an IPO is such a critical stage of development for your company. You don't just want to meet one or two or three people before you go out and choose a syndicate. You want to cast a net as wide as possible in these early stages to really drill down and decide who is the best person from both a banking perspective and a personality perspective that fits with your company, that understands your business. So, you can get out there today. That doesn't mean you have to go out and do an exhaustive, 3-day roadshow where you meet all the bankers possible. Do it over time. And then the important thing is to follow up with them. You don't need to follow up every month, but, once a quarter or once every 6 months, making sure they know what progress you've made in the business is an appropriate follow-up plan.
How much time do you recommend allotting for the pre-IPO, during the IPO, post-IPO whole process?
The whole process really should start almost a year or so out if you're considering the full-blown pre-IPO stage where you're looking at auditing your own PR activities, setting up systems, looking at setting up making sure your accounting and auditing system is in line with what are public company practices. Those are far back. And then in terms of getting your offering going, then that's a matter of working with the lawyers, the auditors, and the bankers to start drafting the prospectus. Now, thereafter that can take months of time, and a lot of that starts to what starts to impact the timing is the marketing window that the bankers and the rest of the syndicate members perceive. If, for example, the industry you're in looks like it's hot and a lot of people want to see it, then it will start getting very intense and the times will get shorter, and you'll have to work very quickly to make sure your offering is in the market as far as they see the window open. That being said, what we're seeing lately, though, is typically you would see a marketing period of an IPO roadshow going for, say, 3 weeks, a month, depending on the size of the deal. We're actually seeing now that these marketing periods are being stretched quite a lot out, and you're seeing something like 2 months or so that the roadshow kind of goes on because the markets are a bit softer and it's not quite as easy to raise money as it might have been a year or two ago.
Yeah, I think the normal rule from the TMX is that the traditional IPO can be as short as 12 to 14 weeks. Now, that's certainly not to say that every IPO is that short, but that's about as condensed as you can make it from when you file the prospectus to when you start trading.
That's great. Okay, this question's for Emily. Emily, how long do you recommend the presentation is?
Well, you have about 20 minutes for the presentation. Usually your meeting will be about 45 minutes. So when you think about making sure you have time for your presentation and time for the Q&A with the person you're meeting with, as I said, try to keep that presentation around 20 minutes long. Now, that means about 20 slides long, though depending on how the presentation is structured, you might be able to go, sort of 25, 30 slides. But in average, you would like to have the complete presentation done and wrapped up in 20 minutes.
Great. Okay, and final question on the line before we wrap up. Is an IPO appropriate or feasible for a smaller startup? What are your thoughts?
Certainly, it depends what you mean by small. For startup companies, usually what the market wants to see is a track record of results. So revenue. There's often even if the company's not profitable, they want to see that it's had a good, steady track record of market share. So for a startup, generally the venues are often looking at the venture capital world and places like that where they can invest in you, help structure you, and get you ready to go public. However, the TSX does have a model, which is the Capital Pool Corporation, CPC, which is a way that a lot of startups do happen. Essentially, what happens is that the corporation is created, and then the investors invest around $250,000, and that becomes the vehicle by which a small company can be taken in and start to trade that way.
All right, thank you. Thank you, Ross, Craig, and Emily. That will wrap up for today. Please do check us out, though, on www.irmatters.com for more tips and insights on best practices in investor relations. Also, stay tuned for our next webinar to be held on February 16th. The link to register will also be on www.irmatters.com. Thank you very much.
Thanks.